Welcome on board the management of Teamlease. We've got on board with us Ravi Vishwanat, the CFO at Teamlease Services, joining in on the show. Ravi, hi, good morning. Good to speak with you. Given the macro headwinds, what's the outlook that you have on the general staffing business? How is it that you're planning to improve productivity ratios here?
Yeah, hi. We did expect a better offtake in the general staffing business, but there has been some amount of slowness, which has percolated into Q4 from Q3. The outlook is, the pipeline continues to be strong, and we are still pretty bullish about what we have and the deals that we are currently pursuing. But having said that, there is some amount of nervousness in the market. Temporary staffing is still okay because people do believe that at some point in time in the next 3 to 6 months, things will be getting back into a normalcy mode. It's not yet, we're not yet there, but we do think that we should be hitting those zones soon enough. And yeah, so Q3 has been, we did expect Q3 and Q4 to be very strong, but at this point of time, I think it's going to be, we'll just wait and watch for our results to come out, and then we'll take a call. Coming back to on the productivity front, yes, there's a lot that's happening at our end, at the back end, especially at the back end on the tech front. There's multiple projects that we're working on to improve productivity. That's got nothing to do with the markets really, and that's really where a lot of our focus is going into right now, because we do know that the growth will be back and will be back soon, and we should be ready for it at that point of time. There's a bunch of IT-related stuff that's happening at the back end, and those should start contributing to the productivity soon enough.
Okay, so Vishwanath, while revenues have grown, your margins have compressed. So what is the outlook for the second half?
We don't give guidance normally, and it's not going to be any exception this time around. We will, historically, there have been some one-time charges that have impacted our margins in H1. Those one-time charges will not be there in H2. So to that extent, I would say that we could probably expect the margins to be on similar lines like what you've seen in the past.
Okay, and talk to us about the specialized staffing business, how the landscape has changed post your acquisition of IMS.
IMSI is a company that's focused on infrastructure management for, basically your infrastructure management services, and that kind of completes the entire portfolio of services that we have to offer for the IT in the IT staffing space. We do staffing for product companies, we do staffing for the captive units here in India, and we also do staffing for the service company. The only area where we had where we did not really operate was in the infrastructure management services, and that kind of completes it. So with this IMSI acquisition having been done, we now focused on integrating all these together and under a common leadership at the back end, and then growing it from here onwards actually.
Okay. What cues are you getting from IT, from telecom? Are you trimming your interest at all in any of the margin dilutive projects in telecom?
Yes, we are. In the sense that we did get into some margin dilutive projects last year. We've come out of almost about 75 to 80% of them. We have kind of exited. There's still a few of them which are still lingering on, and we do hope to get out of those before 31st March. And once we come out of those, we do believe that telecom would be back to the 4 to 5% net margins like what we used to have in the past. But having said that, we do see some amount of interest with staffing with companies for telecom staffing currently. So there's some amount of interest that companies are showing, and that's a good sign for the telecom staffing business. IT is still okay. because the level of penetration of staffing in IT is very small. IT is still okay. The sales cycles or the kind of cycle time are fairly long in IT, which is why growth also we don't project more than a 25% growth in each of these kind of verticals, but they should be getting back to normal in about a quarter or two.
Okay, now given the fact that the industry is fairly fragmented, we are seeing a lot of new entrants due to the low barriers to entry. How are you going to look to defend market share? What's the strategy in place? And do you think that pricing in this case will play an important role?
See, you're absolutely right. There are no barriers to entry at all, but there are huge barriers to scale in the staffing business, which is why you don't have many companies or many players with more than a 50,000 headcount. You've got to start investing massively in people, process, technology once you hit the 40 to 50,000 headcount numbers. And so clearly what we are seeing today is at the top, it's really, a bunch of companies that we operate at the top, whether it is, of all the organized players, and there are not too many of the smaller ones whom we encounter at some of the large mandates. It is the recognized names that we encounter, and I don't think pricing is an issue. It's because we have hit rock bottom as far as pricing is concerned. It can only get better from here. It can't get worse than this.
Good to have you on the show then. Thank you so much for taking the time out and speaking with us today.
Thank you. Thank you very much.